Hey yo, what's up guys? So back again, here I am, Tony Trades, aka Victus. Today we're gonna go ahead and just get a really good insight on primarily the basics, right? I know we have a lot of vets, I know we have, a couple new beginners and people who are just coming in with us, kind of not really understanding just market sentiment and market trends and market structure. So I really want to break down a big portion of that. Um, that's what we're going to be going over today. Um, it's going to be primarily going over trends. We're also going to be talking about support and resistance. And we're going to close it out with how to use these so that way you can go into your trade and execute at the right time, the right moment, whenever it is that the indications are given. That's when the execution should be moved forward with. So what we're going to go ahead and talk about is also how to differentiate between scalping, which is just intraday, quick in and out movements, just day trading. Um, that's primarily if you want to just go deeper into it. And I also will dissect how to use trend lines in those specific time frames. So me personally, I like to use the daily to go ahead and just get a grand scope of things and be able to identify the trend, right? Because to be able to look at the trend, essentially what you're doing is you're able to identify where is the specific momentum shifted towards. Is it to the upside or is it to the downside? Trend is your friend, right? And so essentially, when you're looking at these charts, you want to go with where the trend is specifically. So if you guys can kind of see a trend, an uptrend is explained as a higher high, as you can see, a higher high and a higher low, right? And up next, you see a higher high and a higher low. You see a higher high and a higher low. Higher high, higher low, higher high, higher low, higher high, higher low. So all these lows that are happening, the lows, the dips, they're all higher than the previous low. As you can see, this one's low, but so is this one. However, this is higher than this, therefore we are moving in a uptrend because as well, you can confirm it with the higher high, right? This high was higher than this high, and this high was higher than this high. Therefore, this is giving you an indication that we are going up, right? This is a uptrend. So the way to draw the dynamics of it and to be able to understand it, you essentially want to draw your trend line. And that's just helping you more get a real view of where that specific trend likes to touch and likes to be in within price points and price levels. So if you go ahead and start your trend line here and move it on up, since we know that it's an uptrend, we want to essentially connect it with as many points as possible on this chart, right? So every single point that I can connect to this trend line, it makes it more valid, right? It connects every single point, and if I wanted to finish drawing that trend line there, that would have worked perfectly because we have confirmations that in this specific trend, this trend line acts as areas of interest within the trend. So in the trend, obviously we have low points and we also have high points. These can vary, especially whenever they're dancing on the trend. So the farther they are away from the trend, the more it helps you just identify that at some point we are going to have a retraction because, as you could say, the uptrend essentially liked to be within the range of that trend. And once we finally pulled off from it, it's almost like a magnet, right? It pulls it right back to it. And based off of all this trend that we can see, all the confirmations that we can have, it gives us a clear indication that this is a strong trend line. So now what we can do with this also is we can identify levels of support and levels of resistance. So just the same way that you can see support holding above and resistance holding below, that's exactly where you need to identify where the trend is at that point in time. So if it's obviously in an uptrend, but and it's consecutively acting as support above the trend line, and gives us more confidence in that uptrend market, in that bull trend, right? So being able to see it holding up as support above is good and clear indication that, hey, okay, the trend is still holding to the upside. Now, when it does break below the trend, that's more of a indication that, hey, we need to watch out because it might start ranging, meaning it might just be going sideways. Whereas if you could see, it sort of looks like it's just going sideways for the past couple months now, right? From September to December, we've kind of stayed in between the same price range. So this is just a range that's happening. What you want to also identify is now, since we're under this trend line, we want to then observe and see at any point, can it come to this specific level, right? Can it come and retrace right back to the trend? So that's what we need to watch. That's what we're looking for, to reclaim that trend so that it can continue just going higher and finishing out also this sentiment of an uptrend. Now, another thing that you could also potentially do is you can draw more. It doesn't have to be just one, because one just gives you just an indication of the trend. But now if you want to get a little more in depth, right? So again, what did I say? You want to connect the points, connect it here, even if it's not here, right? Or it could possibly be here, right? There could be variances. It's all just a matter of where do you have the most confirmations, right? So if I were to draw it here and connect it to this wick and bring it across, do I have more confirmations there than I do here? And also, the thing could also be, you could even draw those two variances. Beginning out, just kind of starting out, you really just want to just connect as many points as you possibly can, because that essentially gives you an idea of where it is that the support is holding, where it is that the areas of interest are, and how many confirmations can you get on these specific trend lines. So the more confirmations, as you can see, the better, right? Because that just gives you an indication that, hey, this trend line, particularly right here, is a very strong one. So depending on what Apple, right, because that's what we're looking at the stock, what Apple decides to do here in this specific moment, then we can kind of get an indication that either it's going to hold as support or it's going to break below and act as resistance, right? So that's identifying just trends, being able to see that, how in the channel specifically is it going, and then also identifying your support and resistance levels, right? Your trend is mainly just an indication. It's just one of the variables that you need in order to trade. You can't just trade off of just trends, right? You have to mix it up with all the rest of the confirmations that you get from all variables, including the rest of technical analysis, is support, resistance, your indicators that you use, and just so forth and so forth, right? So right now we're just talking about trends, but this is to build up to that point, right? It's to get to that level where you can then start executing based off of trends or channels, and that's going to help you become a better trader, right? Because when you're able to identify where the market is going, you can then project and kind of get an idea, because in a uptrend, you're essentially only looking to buy, right? You're not really looking to short it. You're not entering a put. You're not shorting the market. It's not a bear market. That's not the time. Right now, we're in a bull market. This is what's happening here. That's what this trend specifically is telling me. So therefore, in a uptrend, I'm looking to buy. Now, on the contrary, if we're to find, something of a downtrend, then we go ahead and set our trends to the downside. And again, is we want to, connect as many points as possible. It doesn't necessarily need to be out here. It could, right? We could see this as a potential point of interest as well. However, what I'm looking at is this area of just continuous downside consolidation, right? It almost looks just consolidated within itself, but eventually it begins to melt off this downtrend. Now we have this retracement, this pullback. So this is a very key area of interest, right? We want to look at this specific area, if not the ones that came before or after, to draw a conclusive state of, okay, where is my confirmations best at? Is it best on what happened after? Did I have as many confirmations here? Right, and it shows here, because then right here, this was that confirmation that what could have told us that this was a strong point of interest right in this area, because when it tried to go above this, it tried to act as support above this trend line, it completely just went to the downside. So it melted, came, and then eventually it didn't come nearly as close as what it did when it was trying to break it to the upside, right? So this is a strong trend line, and as you can see, I have multiple confirmations here, multiple confirmations here. Confirmations are just, it sits on it perfectly. It respects it. It touches it, and look at that wick right on it. Boom. That's a confirmation. That's a confirmation. These are confirmations, confirmation, confirmation, confirmation. You see, and that's just giving us that insight and that awareness to say, okay, we are in a downtrend, right? This is a downtrend. So what you're essentially looking to look at and to identify it is you need to make lower lows and lower highs, right? So how we were able to identify an uptrend is higher highs, higher lows, right? Now here, what we're looking at is we're looking for higher lows, right? Higher low, right? Higher low, right? And then on the downtrend again, lower low, lower low, lower low, lower low, right? So we're going down. The highs are going down, the lows are going down. So what we're looking for is now we're looking for an opportunity to short, right? This is now where you can come into this market and say, hey, we have as many confirmations as we can possibly on this specific downtrend. We know that it's a downtrend. We also understand that the best opportunity to see when this downtrend can be traded is when it's in its area of resistance below the trend, right? Because when it's above it, that's a sign and an indication that it could potentially reverse, and we're not looking to short it if it's above it, right? That's another key component of trading trends, is you want to look at where is it at specifically in the point of time, because if you try to trade it to the downside above it, it might psych you out, you might lose out, you might hit your stop loss, because now it's acting as support, right? And support could potentially hold it going up. So you don't ever want to get caught in that scenario. You want to, limit your loss, limit your risk, and make the best calculated decision based off of all these confirmations, all of these connotations, and being able to put it together to make and execute a very wise, smart decision. So when you want to execute a short is potentially when it's acting as resistance, right? Whereas on contrary, when you want to enter a long, which is just, you're potentially expecting this trend to continue upwards on the trend on the support. You're not necessarily doing it on the resistance side. You're waiting for the confirmation to come and reclaim this trend as support. So that's when you want to enter for a long when it's an uptrend, and for a downtrend, it's just the complete opposite. It's just wait for that, resistance to hold and act as that confirmation, and there you have an entry point, right? So this is just on the daily. This is also just to see the grander scope of things, because as you guys can see, from when it started, which was October the 18th, all the way until January 19th, right, we had this sort of just downtrend. So within this specific time frame, you could have gone in at a shorter time frame, because we're just looking at it the daily, gone in on the hourly, and gone in deeper and seen, okay, at what point can I short and at what point can I secure? And as you can see, now we're a lot more in depth on this specific trend, because it's on the hourly. So every single candlestick represents an hour. Now, that is also going to be able to tell us is that for every single hour that passes, that's exactly how much of a movement occurred, right? So when it at any point comes and wants to retest this trend line and it's acting as resistance, These are points of confirmations and also possible entry points to short. Now, the only thing is you need other confirmations. You can't just base off, okay, I'm going to short the market here because it's holding the trend to the downside, right? We've already enacted that first confirmation, that second confirmation, third confirmation. Now I'm looking to short at any one of these points. However, if you were to enter any one of these points, you would be in a huge drawdown because it was acting as support for the entirety of the time that it was going down. So whenever it did eventually come to the downside and retest and break down, then we had an hour where it was complete just shorting, and eventually it broke above it, right? So you also need to know at some point, right, it's going to want to come back to that trend. That's what I was talking about earlier. It acts as a magnet, right? So you want to look at it as, okay, if it decides to run back to this trend, then either I need to exit my trade, either if I'm in profit or if I'm already losing, I need to secure it when it hits potentially at the trend. That's another point of exit, right? You want to look at when is it that I can exit and when is it that I can enter. And these trends, they help you identify all these points because the closer it gets to the trend, the closer you're needing to make a decision, right? So another point that I really want to get across is that with everything and anything, you have an equal and opposite reaction, right? So, what that really essentially means is when you have a retracement off of the trend line that breaks to the downside, that comes in eventually, has that retest, these are points of entries, your retests, your confirmations. These are the points when deciding everything else off of your support resistance, off of your technical analysis and everything that you conclude to make that, educated and very calculated decision, you're able to then identify that, hey, I need to enter at this point or I need to exit at so and so level on this specific trend, right? Because the trend is your friend. And when you look at just how every single time that it's acted as support above the trend, you can see that it ranged, right? It just began to range where eventually it had to make a decision. Because also what you could have then concluded to do here is you could have added your resistance lines, right? Because at no point did this specific trend want to break above. It wanted to just continue to the downside. This trend was still holding strong to the downside. So at any point of these retests, you could have came in and shorted this market, right? Now, what you also want to look for is when it begins to go above and act as support. You want to look at those levels as, hey, this is a telltale sign. This is a warning sign that it could either make a move here, but if it doesn't move to the upside, it can make a huge move to the downside. And I don't want to catch that, right? If you're trying to catch the reversals, I'm not telling you this is the way to do it. I'm just saying this is a indication telling us that, hey, we could potentially reverse, but it's not concrete. It's not guaranteed. We've already had this confirmation of a downtrend. We're essentially just looking at these as, hey, this could potentially reverse, but I'm not in this trade, right? I'm looking at it as, okay, it needs to come back to the trend to confirm, to act as resistance, boom, short it, right? That's what you're looking for. And once it gets above, right, that's what I'm saying is you're not looking to short here. You're looking to just hold off, see exactly where it wants to move, if it wants to act as support, and continue higher, right? And continue it, and to a point where now it looks like it's beginning to just kind of trade into a uptrend, right? Or then eventually, and be able to detect in an intraday market is you want to go on the hourly, right? And begin to identify when the trend breaks to the upside. Okay, what was my lowest point, right? And off of that, now you can begin to draw your next trend line to the upside, right? So it's as many points as it can confirm. So if we look here, we're trying to hold this uptrend. It looks good right in this area, right there, off these wicks. Yep. All right. So you could see that for the most part, it acted as a support, squeezed between, broke above, acted as support, acted as support, support, and we continue to move up, right? So being able to identify these trends can then help you see when are points of interest within this specific trend line that you can then identify as potential entry points, exit stops, or anything really that you need to use and observe when you're in this specific stock. So anytime that you open up your chart, you open up anything that you're looking at, where your stock is, what the market is looking like in the morning, you always want to look at SPY, right? SPY is essentially an ETF that you can trade. And it's essentially what the market really is at, where it's at, what it's doing. That's what the market sentiment is based off of. And the reason I really wanted to talk about Apple and kind of just draw, the trend lines here is because Apple follows SPY, right? And what that is it just kind of gives you an indication telling you that, hey, well, also Apple could potentially tell you how the market sentiment goes, right? Essentially, you would just want to really look at SPY, but Apple, SPY is really heavy in Apple. So it just kind of gives you that indication that, okay, if I'm looking at Apple, then I can also get a clearer indication of what the market is looking like. So that's understanding trends, that's understanding how to execute. And I hope you guys learned something because, it's always about how can I apply what I just learned, right? You have to go, you have to apply this, you have to draw, you have to, just test it out. And what levels do I need to really pay attention to? Where are my points of interest? And how do I execute and trade based off of that? So seeing these points and allowing it to confirm, right, that retests, it then gives you more confirmation and more confidence when you're entering, a long, or, you know, that's why they always say buy at the low, sell at the high, buy at the low, sell at the high. And even able, you could even, that's why another point is if you were to enter at any one, off any one of these points, you can then use this as your next level of exit, right? And if you want to do it on the contrary, then as you can see, when you do decide to enter here again, based off that retest, based off that confirmation, based off that trend held support, then you know that, hey, my next take profit level could be based off of the trend that is holding even as these highs are happening. So these highs act as resistance, which then give you levels of, confirming and levels of take profit. So yeah, these are just execution levels, and I hope that helps everyone be able to learn how to use your trend lines, how to use these confirmations, and really take your trading to the next level, right? This is just step one. This is just phase one. This is just the basics. But the basics, the fundamentals, that's what every single trader uses. So this is how you are going to get to that pro level. This is how traders at the highest of levels are looking at these charts. They're just looking at the trends. They're looking at these lines. So if you can see these as well, then everyone is seeing the same thing, and that just helps your confirmations, their confirmations, everyone's trading to be able to be on the same page. And that's essentially what you're looking at to do is whenever you're trading the stocks, is you're just looking and seeing, okay, when are these confirmations happening within all the rest of these traders are trading. I hope that was really valuable for everyone. If you have any questions, please ask in our chat. It is open for discussion. I do want to emphasize that, you know, those that really apply this and ask and really go and are consistent with the method, those are the people who will really learn. Because if everyone, I promise you, everyone wants to trade, but nobody wants to study. Nobody wants to put in the time to actually practice. Nobody wants to actually look at the market structure and draw just your simple trend lines. Nobody wants to do that. Everybody wants to just plug and play. This is a high risk sentiment. This is a high risk market. This is extremely volatile. So you need to do everything possible to have the advantage in your favor. You need to have and be equipped with all the tools. You need to just be prepared, right? And just stay ready. And that comes with understanding all the fundamentals, understanding the basics, laying out the groundwork, and then eventually building upon it. So I hope you guys take that with, knowledge, and we can then move further. So this is the first class. I hope you guys enjoyed it. Again, if you guys have any questions, please ask, and I'll be more than willing to answer them. So thank you guys again, and we'll see you guys soon.